Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is October 22nd, a Thursday of 2020. A lot of movement in the markets. Headlines we're going to report you might not see on your daily news. So thanks for watching. So here we have it. This week's update. 50 Cent doesn't want to be 20 Cent. And what he's referring to, in the Washington Post reported this earlier this week, was Vice President Biden, if he were to win, if you look at his tax policy, taxes are going to go up. 50 Cent did just the same. He applied it on himself and said, nope, he's out. So he is not saying who he's voting for, but what he is saying is he's not voting for higher taxes. He's withdrawing his support for higher taxes. In this case, it's for Joe Biden. That being said, if 50 Cent realistically is not going to pay the taxes that you and I may pay, simply because he's going to hire a team of tax professionals. And so regardless of whoever wins the White House, here's the game. Both politicians are speaking about raising taxes, lowering taxes, and that's not just unique for this political cycle. That's going to happen every 2 to 4 years. You're going to continue to see that through our election sort of cycle. That being said, there are 7,000 pages of the IRS tax code. So we have got a lot of clients that hire us that work with their CPAs and tax attorneys and estate planning attorneys to properly design, craft a custom tailored approach to saving money and keeping the wealth that you've earned within your family, whether it's saving on taxes, increasing and enhancing portfolio returns and reducing costs in terms of your portfolio, taking advantage of the 7,000 page code of the IRS tax code. There's a lot of, most politicians are betting that most Americans would just go to the, local do-it-yourself shop for taxes, file your taxes, and unfortunately, the lowest wage earners pay the most tax. It's an actual true statement as it relates to their net income tax, okay? So that's what politicians prey on, regardless. So you want to hire the best. You want to hire our team here at Blanke Schein Wealth Management as it relates to investment management. And we bring together, we'll work with your existing team, your estate planning, as well as your tax team. And we will make certain that you're going to ultimately pay only what you really owe, right? And protect what you have and look at long into the future and work together on a daily basis to make sure that you're protected. So it's important. I know the headline was big and it's going to continue, especially in this political season right now. But regardless of who gets in, those like the President Trump, like Jeff Bezos of Amazon, those the highest income earners are not going to pay. Warren Buffett, they're not going to pay the taxes or the highest tax rate because they're going to hire the best people around them. So that's what we recommend as it relates to on a go-forward basis. How do we protect ourselves regardless of whoever gets in? Get the best team and surround yourself with them. So real quick, the latest headline as I report this, Nancy Pelosi just came out and said that we're almost there, in quotes, which means that Steve Mnuchin, Treasury Secretary, and Nancy Pelosi and Congress potentially have a deal. We will wait and see. Ultimately, I think the Founding Fathers knew what they were doing with regards to making certain that we have a political system that resets every 2 to 4 years, if you will, respectively, depending upon, obviously the White House or Congress. That being said, because that's the election sort of impetus of all of these politicians have to answer to their constituents. And so they know the election is about, a week and a half away. So they don't want to upset the apple cart. And if they do so, it could mean an end of their job, whether it's this cycle or next cycle. So Founding Fathers got that whole theory played out. Let's see how it all continues to go. They did a good job because now the politicians actually have to put up or shut up, and we will see how this plays out. Our last topic of the day, U.S. economy and growth rates. If you've been monitoring like we have this rebound, you could call it a huge snapback. I refer to it as rubber band. As much as you go down and as much as you tug on a strong economy or a strong taut rubber band and you let it go, it's going to snap back. We're going to see, so that's what you get from the second quarter to the third quarter. Third quarter GDP is going to be reported in the next week or so, and it's going to be plus 35%, right? I said that from day one, it's going to be a huge number, probably record breaking, which is a wonderful number. That being said, a lot of the easy gains have been made. And now the tough part is going to sort of be playing out over the next year. But like I said before, if and when we get the stimulus, that's going to help smooth the rough economy. Why the GDP is important? Because if you look at the US economy from 1966 to 2008, the GDP rose at an average of 3%. It's both political parties, right? 2008 to 2016, obviously there was a recession in there. The GDP under that period of time was sub 2%. So just about a 2% GDP. And then in 2016, it went back up to just about a 3% average, which is the long-term historical average. Why that's important and why there's so much emphasis on this GDP number is because it measures the growth of the U.S. economy. And if the growth of the U.S. economy is there, that ultimately means between a 2% and a 3% difference between that and the GDP number, just a 1% difference, is an extra $25,000 for every man, woman, and child in America today in terms of just more enhanced wealth for every, and there's 320 plus million Americans. So that 1% in that GDP number from 2% to 3% is over $25,000 of your own personal wealth within your household. So count the number of people up, look at that. The GDP matters, and it really matters as it relates to economic growth. So we're going to continue to pay attention to this. We know that a lot of gains, easy gains, have already been sort of rebounded, if you will. And so we're going to watch the growth rate going forward. But let's keep an eye on the US GDP number on a go-forward basis, because that means a lot of wealth in your pocket. So thanks for watching today. Have a great day. We'll see you again next time.